Hey everyone, Couch Investor back on our earnings video for today. So, Pinterest reported great earnings, double beat. The stock is up around 12 to 13% at the time of making this video. Of course, by the time you're watching this video, the stock could be up more or even down. We've had crazy stock reactions with regards to SoFi, for example. Stock was up at the open 12, 15% or so. Then at some point during the trading day, it was actually down 2%. Closed the day up only 1%, even after a triple beat. So right now we are in a crazy environment. But Pinterest showed us yet again after the analyst day, now with the earnings report, that they are back on track and growing top and bottom line. So what exactly has happened? So we'll first start with a couple of comments here from Bill Reddy, the CEO of Pinterest. We continue to accelerate the business in Q3. We are driving strong revenue performance, robust global MAUs, monthly active users, and substantial margin expansion as we lean into Pinterest's unique differentiators as a visual search, discovery, and shopping platform. We're finding our best product market fit in years. Our users are engaging deeply, and we're delivering better results for advertisers through improved measurements and innovation across the full funnel. We're making significant progress and are continuing to execute on the opportunity ahead. So let's start already with a couple of things they mentioned here in their slides. So first up, there was a campaign by Maybelline Canada. They had 2x higher video completion rate versus the average video campaign. Of course, we know that video is becoming extremely popular and the conversion rates there overall are much better than any other offering before. As for expanding advertiser solutions, there are a couple of things I want to touch on. First up, direct links. So they launched direct links in Q3 and have migrated approximately 60% of lower funnel revenue to direct links, with plans to roll out the remaining eligible lower funnel objectives, including CPC video ads and conversion ads by the end of Q1 2024. They saw 88% higher outbound click-through rates and a 39% decrease in cost per outbound click for CPC objectives from early direct links adopters. Now, direct links, basically, you click on it and you get directed to the website of the product you want to buy or just things you want to explore. Previously, these things didn't really work that well. Also, with regards to shopping, I've said this already 2 years ago, 2.5 years ago by now, that shopping needs to be way more accessible, way easier to be done on Pinterest. Previously, you had to click a couple of times until you actually got to the product. It was really a horrible experience. It's getting much better. Now, with regards to shopping, of course, we had that announcement that they're partnering up with Amazon, which they are supplying more and more ads. Now, they gave us here a bit more information. So as we mentioned during our investor day, we are seeing strong early test results from our Amazon Ads third-party partnership with over 50% improvements in relevance on search and 100% improvements in relevance on related items. And of course, this is still early days, but the results here are already better than expected. And they said during the call that it's not only going to be limited to Amazon, this is just the start. Expect more partners in 2024. So that's pretty exciting. Now, before continue, I just want to say thank you very much to everybody that has been subscribing. We're now over 30,000 subscribers on this channel. So really thank you very much for all the support. And if you're new here, maybe hit that subscribe button. Let's try and reach the next goal, which is going to be 40,000 subscribers whenever that will happen. So thank you again to everyone that has been watching the videos, hitting the like button with notifications on. I really, really appreciate that. Then, if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so double-digit growth when it comes to revenue, 11% year over year. That's up 8% in US and Canada, 33% in Europe, and rest of the world up 29% year over year. With regards to monthly active users, that also finally continues to grow, up 8% year over year. It's also up quarter over quarter. The majority of that jump is coming from rest of the world, which of course, if we go and look at ARPU, average revenue per user, we know that rest of the world is not really worth that much, even though it's up 16% year over year, it's just 12 cents. And you compare that with Europe, which is 91 cents, and US and Canada, which is $6.46. It's not that much. With regards to global, that increased 3% year over year and a bit more quarter over quarter. Now, when talking about margin expansion, they started the year actually with the goal of having margin expansion of around 200 basis points. Now it's trending towards 600 basis points, and they expect to continue margin expansion in 2024, although we should not expect another 600 basis point expansion. But hey, we'll take what we can get. It's already been a pretty good year for the business. And so if we look at non-GAAP cost and expenses, cost of revenue has come down, now 22% of revenue. R&D has come down as well, 20%. Sales and marketing drastically down quarter over quarter to 26%. G&A is at 8%. So all of these segments are down year over year, which is making the business a bit more profitable as well. If you look at adjusted EBITDA, $185 million with a margin of 24%. Their long-term goal here is closer to 30%. So they are right on track. Then one analyst on the earnings call did ask about specifically Temu and whether or not they are spending a lot of money with regards to advertising on Pinterest. Are they overexposed to them, etc., etc.? Because it isn't not really up and coming, but it's becoming a very, very popular shopping app because of how cheap things are on the app. Free shipping worldwide, I believe, but there is also some controversy there with regards to data. Of course, we know TikTok. A lot of things coming out of China usually don't really respect the privacy, but hey, that's a story for another day. So Temu management said that there is still a lot of room to run when it comes to ad load, and they said that they're not overexposed, concentrated with regards to Temu. So even if, I don't know, they get banned or whatnot, it's not really going to impact the business materially. Then with regards to Q4 guidance, they expect revenue to grow in the range of 11 to 13% year over year. They expect Q4 2023 non-GAAP operating expenses to decline in the 9 to 13% range year over year. Of course, Q4 is usually a strong quarter, so when we're going to look at the expenses as a percentage of revenue, it's going to look much better because revenue probably in Q4 will accelerate faster than the expenses. But then when you go and look at Q1, don't be surprised if you suddenly see the percentage of revenue becoming a bit bigger when it comes to expenses. And so if we look at the graph, before they reported earnings, we're basically at the same point that we've been in for over a year now. So Pinterest, yes, despite all of the macro environment, etc., it has been performing much better than the others. Right now, $28.35. It's up 12 to 13% at the time of making this video. Previously, we got rejected twice, maybe 3 times already at around $29, $30 or so. So we're getting closer to that resistance. Let's see what happens. We have the FOMC meeting that will definitely move the market, but there are still a lot of factors that can move the market on the way up or on the way down. Sometimes it has nothing to do with the stock that you own. Why is it up? Why is it down? Most of the time, especially right now in volatile times, the whole market moves up or down and it takes good and bad companies with it. So that will be it for this video. Of course, do share your thoughts down in the comments below. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.